there, welcome to Closing Trades. I'm Snehi Shah. With me as always is Shrishti Sharma. In the last hour of trade, we'll be tracking all the action we've seen so far and what we can expect to see in the last 1 hour of trade. Let's just take stock of where the market is at, and at the session high is where our Nifty 50 is at right now, 24,730, looking very good. Given the way we opened tempered and then took a sharp knock, we've recovered rather beautifully on the charts today on the Nifty. Similar moves coming in for sensex as well. That index is also doing very well for itself in today's trading session. The real show of strength today coming back from the broader end of the market, wherein Nifty mid-cap and small-cap, both of them are doing equally well, if not better. In fact, Nifty mid-cap has seen quite the surge. It's up almost 1.4%, Nifty small-cap to 1.2% higher, so outperforming the benchmarks by a whole leap. You have India VIX that's cooled off significantly after that 3% spike up that we had seen in the first half of the trading session. Nifty Bank, although continues to be absolutely flat, and no amount of cheer on the benchmarks is actually reflecting on the Nifty Bank right now. So that seems to be like one soft spot in the market today. It's Hero Motor doing the heavy lifting today along with Tata Steel. Both of these Nifty 50 measures up 4%. You have BEL, Adani Ports, IndusInd Bank, JSW Steel, Tech Mahindra. All of them are doing well, trading anywhere between 2 and 4%. On the flip side, only select names coming in on the Nifty loser side. You have losses led by HDFC Bank, down by 1%, followed by Power Grid, ONGC, ICICI Bank, HDFC Life, HUL and Apollo Hospitals. So select 6 or 7 stocks in the Nifty 50 losing side. Remaining all of them are gaining today. But let's understand a little bit more about the market, where we can expect the market to head in the near term, what has been working, what's not. Let's understand all of this and more with Mr. Pashupati Advani. He's joining us on the show right now to help us understand a little bit more about the market texture at present. And Mr. Advani, hi, good afternoon, and thanks so much for your time today. Help us understand what you're making of the market right now in terms of how the earnings have shaped up so far. The first half of the earnings season was not that good, but of late, the last couple of sessions or the last 3 to 4 sessions, we've seen good moves coming in.
Well, traditionally, we've had the companies that have sort of good earnings try to come out earlier, and then the ones with indifferent earnings have come out in the latter half of the month. This time it's been the reverse, where the worst ones have come first and the better ones have come towards the end of the month, and that's given a little bit of sort of push to the markets, and that's made everybody happy. The reality is, I think, a lot of this is temporary because, are we really in a position to be able to absorb a 25% tariff hike into the US? Which are the companies that are benefiting? Which are the companies that are going to get hurt? And people are just having to look in those and then try to figure out which ones are going to do well and which ones are not going to do well. On my side, actually, I feel that IT stocks should be under pressure. Unfortunately or fortunately, today they are the active winners, with TCS and Infosys up there in the top part of the gainers. So I think that, but I think that's temporary because I think the model is having to be changed, and I don't know whether these two can actually lead the others and make the model change so that people will be able to benefit because of, and that's got nothing to do with the markets. I think that's got to do with the way AI is coming and the way Microsoft and Google and OpenAI are actually changing the world, and that's here to stay. So that's it.
Coming in on the markets, and yes, the select IT counters rather are doing very well. But Mr. Advani, in this market, select underperformers are also holding up well. Case in point being autos, case in point being the staple companies. And off late, especially in the near term, the news flow regarding the market share gain, the earnings, they are boding well. But do you trust this move for a good run-up from these levels from an investor point of view? Should one really bet on these themes right now?
Well, the reality is the government is continuing to spend to stimulate the economy. So obviously, they're going to continue in infrastructure, real estate, roads. So those companies that benefit from that are definitely going to be in the space and will be the ones to buy. Again, our pharmaceutical companies are doing okay. We seem to have got some reprieve from the US because a lot of the pharmaceuticals are considered to be essential, so they've been not on the tariff list, or at a much lower tariff. So I think that's good for us. One of the things that people haven't noticed so much is that US used to have this small ban on small packets that used to be sent by post into the US, and a lot of pharmaceuticals were coming second sale from Canada and from Mexico into the US. I think that is now stopped, and that's going to have some effect, but it's not really going to have an effect that is going to be meaningful because, our pharmaceuticals can go straight in. So I'm very bullish still on, cement, steel, to some extent, infra companies, which I think are changing down. And, I think, even though big pharma in the US is getting attacked by the US president, I would consider our pharma companies to be small pharma. So I think we're able to slip in and, as generics, we're able to do well. So I think those are all great things that are happening for us and sectors that are definitely going to be interesting for us in India.
Okay, so that's the take on that. Let's move away from that and focus on Marico for the time being, because look at the sharp spike up that has come in the stock. This did not come after the earnings, but the spike we saw came after the presentation came out, and we had some more color on the domestic business volume growth that has come in at 9%. We were pegging our estimates between 6 and 7% or 7 and 8%. So it's looking very good. This 9% volume growth looking absolutely healthy for Marico this time around. But other than that, if you take a look at what these numbers have been, let's take a look at what Marico numbers have been on a year-on-year basis, on a consol basis. Revenue has come in at 3,259 crores, which is up 23.3% on a year-on-year basis, largely in line with what we were estimating. Net profit has come in at 504 crores. Our estimates were at 488. So slight beat versus what we were estimating here. EBITDA has come in at 655 crores. We were seeing this number at 650. So once again, perfectly in line. What's not looking all that great this time around is the margin number that's come in at 20.1. We were expecting 20.3. So not such a big slip, but still slightly under our estimate is what the margins have done this time around. The company is going to be integrating the business Apco's Naturals Private Limited, which is right now the wholly owned subsidiary under the Just Herbs brand, and that is going to be amalgamated in the company. So that's a big announcement coming in from Marico this time around. But other than that, yes, it's the volume number that has got the stock spruced up nicely. International business in terms of constant currency has gone up 19%. We were estimating a 15% number here. So once again, very healthy on this front. Parachute has seen 1% volume degrowth, but a 31% value growth. Beat versus our estimates. Saffola 2 mid-single digit volume growth in line and 28% value growth, once again beat versus our estimates. And value added hair oils 13% year-on-year value growth. In terms of the outlook going ahead, they expect a steady growth trajectory in core categories. They aim to grow foods at 25% plus CAGR. They also aim to scale their digital first portfolio, and they've said that they aim to achieve double-digit EBITDA margin in this foods portfolio and personal care portfolio by FY27. So upbeat commentary in, all looking good, volume number excellent, everything else falls in line, and segmental revenue moves also looking very robust. On the back of that stock is up almost 2.7% as we speak. Mr. Advani, what are you making of the FMCG numbers that we've seen so far? Largely in line or slightly better than our estimates, and it's a surprise coming in from something like FMCG that has been so lackluster on the earnings front for quite a few quarters now.
Well, I think it's taken time for the FMCG players to actually spread into tier 2 and tier 3 towns. And I think that's what's perceived, because there's a cost of doing that. So, their margins have obviously been affected. You spent the last 2-3 minutes on Marico, which I consider to be the best managed out of all the FMCG companies. And, they're doing a super job and they're super organized. And, so they're going to continue to go in there. But, as you said, FMCG had gone to sleep, but they had all basically taken the step to go into tier 2 and tier 3 towns. Now that they're set up there and we're beginning to see revenue from there, albeit at a slightly lesser margin, I think that, it's just a matter of time where those margins don't shift to the rural areas, and then these companies will do even better, which is the reason why people have come into these companies and why they're buying them again. Again, it's slightly defensive because the markets itself overall are looking a little sort of lackluster. And the other challenge that we're having is we're having a huge number of IPOs that are coming and taking a lot of the real money out of the market. And I think that's something that we have to live with. But corporate India is being smart and getting out of giving stakes to the public.
All right, that's the take coming in on the staples. But along with that, some of the other earning candidates, let's put the spotlight on Escorts, because this time around a good set of numbers coming in. Though on the revenue front, on the standalone basis, there's a marginal decline. But along with that, the margins have improved from 12.5% to 13%. Now, given the fact that the volumes has shrunk for the company, along with that, the company has managed to maintain or rather grow their margins 13% odd mark. Other than that, there's also an exceptional part of 75 crores. That's on the account of sale of land and building of the agri machinery spare part division worth 75 crores, which was added into their profit figure. So that is one of the other adjustments. But along with that, what we are getting to see is that yes, it's the margin that has done very well, and along with that, in terms of the market share as well, the company has given their update there too with respect to some marginal gain on that particular front. Along with that, it's Kubota as well, wherein that was another stream where the export was actually expected to grow from that particular channel, and the company does say that from their overall exports, 52% of their exports are now through Kubota channel. And post the earnings, we have seen a good surge, almost a 4% jump is what the stock is experiencing right now as well. And Mr. Advani, like you were highlighting the fact that one of the themes that is boding well for the auto division is actually the kind of push that the government is giving. But do you believe tractor could be a good story to play this?
Well, obviously, we depend on agriculture. The government is committed to agriculture. It's apart from anything else, it's the bottom of the pyramid for most places. So obviously, tractors will be. There was a question that people were not renewing tractors, but we've seen good results from M&M. Obviously, that's followed by Escorts. And, I think it's only a question of Aisha also coming into line. They've also had decent results. So tractors, people are buying. There was a little bit of a lull where people had slowed down, but I think they're coming back into line and rebuying again. And it's that time of the cycle for tractors to be rebought.
Okay, so that's the take on tractors and how to play that story in terms of that segment. But on that note, we'll step into a very short break and be right back and keep the conversation going with Mr. Advani and more experts on the other side.
Welcome back to Closing Trades right here on ET Now, and let's welcome Aditya Agrawal, Head of Research and Investment at invest4edu.com. Hi Aditya, good afternoon. Good to be speaking with you. And Aditya, surprising move coming in on the benchmark indices, because given the global handover, no technical expert for today in the market was anticipating such sort of a move. Are you also surprised by the Nifty up move today?
Hi, Srishti. Good afternoon. Thanks for the show. Absolutely. Nobody would say that they had anticipated this kind of an 150-point almost kind of an up move, especially given the fact that how we had closed on Friday's trading session. It's a surprise move without a doubt, but not without taking support at key areas of 25,000, 24,500, 24,550. So that happened to be the key support area, Srishti, and from there index has bounced back. And what is interesting to see is VIX had also tested almost those levels of 12.7, 12.8. From there, it's cooled off as well. Bank Nifty underperforms, continues to underperform. That is a bit of an overhang for the Nifty to see further upside from here on. So I would expect Bank Nifty also to start chipping in from tomorrow onwards. This week, I think Bank Nifty should also see a good short covering rally. And on the Nifty, I think you could see at least 24,900 kind of a move within this week. My sense is this up move that we're witnessing in trade today is likely to continue on the back of some more short covering and fresh long addition.
Okay, so that's the take on where the market could be headed, what has led to such robust moves in the market today. But Mr. Advani, I want to come back to you and get your sense about the entire metal space. Top gaining sector today, Nifty Metal is up about 2%, and particularly it's the entire steel end of the metal pack that's doing well. Case in point being SAIL, Tata Steel, Jindal Steel, JSW Steel. What are you making of this group of stocks, the entire metal index, and what's your positioning when it comes to this index?
So obviously, I'm very happy with this. The steel companies going up, because at the end of it all, you do need as much steel as you need for cement, and you need for all the infrastructure projects, you need steel and cement. So I think both of those sectors are bound to do okay. And as I said, the government is continuing to spend in big amounts on those infrastructure, plus the builder sector has actually got a whole bunch of projects to complete. And with RERA in the background, they have to complete within a certain time. So there is a huge demand for steel. I think there's been some tweaking or talk of tweaking of some duties because there was some anti-dumping duty issue with China, which seems to be maybe getting sorted. So I think that that's probably the reason why steel companies have gone up, because in anticipation of that happening. and we all know how that works.
All right, that's the take coming in on the steel counters. Yes, of course, very good moves coming in on the metal pack in today's trading session. But with this, Mr. Advani, we'll let you go on that. Really appreciate you taking the time out and speaking with us. Thank you so much.
Thanks.
All right, but with this, viewers, let's move on, and all eyes on the RBI's MPC meet this particular week, wherein 77% of economists still expect a rate pause, down from 97% earlier, but odds of a cut are rising with inflation at a 77-month low and US tariff risk looming. GDP growth has slowed to a 4-year low, though the RBI still pegs FY26 growth at 6.5%. Ashesha joins in with what to expect. Ashesha.
Well, yes, first up, let's put the spotlight on what the broad expectation is from the Monetary Policy Committee outcome. Now, 77% of polled economists do not expect a rate cut from the MPC meeting this week. Now, remember, after the 25% tariff that was levied by US last week, odds of rate cut have now risen by nearly 25%. But of course, 77% estimates suggest that perhaps we will not see a rate cut this time around. Let's take a look at some other figures. Then 97% economists polled earlier expected status quo, but that now has fallen from 97% earlier to 77% now. And as I mentioned, this is because of the 25% tariff that was announced by United States last week. Let's take a look at where the current rates stand. We have CRR at 4%, SLR at 18%, bank rate at 5.75%, repo rate at 5.5%, and SDF rate at 5.25%. So these are some of the important rates that you need to keep an eye out on ahead of the monetary policy meeting outcome. To put things into perspective, WPI inflation currently stands at 20-month low, CPI inflation at 2.5%, which is at 77-month low, and we have demand concerns which continue to impact the kind of outcome Reserve Bank of India and the monetary policy could come out with in this particular meeting. Now let's take a look at GDP figures then. Fourth quarter FY25 GDP stood at 7.4%, and for the last full year, which was at 4-year low, we saw GDP which came in at 6.5%. We also have what brokerage houses are estimating for FY26 GDP. We have RBI, which is predicting 6.5% GDP for FY26, IMF a little conservative at 6.2%, World Bank at 6.3%, S&P Global at 6.5%, and CRISIL, which is also expecting 6.5% GDP for FY26. So anywhere between 6.2 to 6.5% is the broad estimate. As far as CPI estimates are concerned, RBI is predicting 3.7% for the month of June and nearly 4% for the month of April for the full year FY26. So the estimate has changed from June to April. Now apart from that, we also have GDP estimates where RBI as of June is predicting 6.3% growth for the fourth quarter and 6.5% for FY26. But yes, largely the expectation is that we are not expecting rate cut, but there's a consensus, there's a divided view that perhaps we could probably see a 25 basis points rate cut in the meeting this week.
Okay, Ashesha, thanks so much for taking us through that. Well, of course, all eyes are going to be on the MPC outcome day after tomorrow. Remember, the meeting is underway. It's a 3-day meeting which has begun today. So the outcome for us will be on Wednesday at 10 a.m. But, well, the beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments too. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing the 4th of every month, which is today, as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
And easy now, Leaders of Tomorrow is back with season 13. Yes, this is India's longest running television show, dedicated to MSMEs. And this season, Leaders of Tomorrow is spotlighting the spirit of Indian entrepreneurs through the theme Agility, Ambition, Ascent. Witness how bold visionaries adapting to the change and reaching new heights. Don't miss Leaders of Tomorrow Season 13, starting today, Monday to Friday at 7:30 p.m. only on ET Now.
Hi there, welcome back to Closing Trades. We also have a whole host of guests joining us on the show now. Aditya joins us from the previous segment, but we also have Mr. Nitin Raheja, Executive Director at Julius Baer Wealth Advisors, joining us. And along with him, we also have Ruchir Jain joining us of Motilal Oswal Financial Services. Good afternoon to both of you. But before I come to you, Aditya, I want to come back to you and get your sense on the kind of moves we've seen on Aditya Birla Capital post its earnings. The stock is up 11%. We had the numbers come in about an hour or so ago. Just look at that kind of uptick we've seen on that stock. Aditya, what's your take on this stock on the charts, and what's this 11% intraday move today telling?
A very strong move, without a doubt. And I think so, if one already has the stock, one should continue to hold on to the positions because I see much higher levels in the coming times. One can look at least a level of 360 on the upside if one holds on to it for at least 6 months or so. My sense is 360 is something which is possible here. If somebody is looking for a fresh entry as well, maybe they can go ahead for a staggered buying. They can buy some at current levels, and if it declines, say to close to 265, 270 in the event of any profit taking, they can add on to the further positions for a target of 360 that I just mentioned. It's a very strong looking chart setup, and the volumes are also confirming the up move is going to stay and could see much higher levels.
All right, so that's the take coming in on AV Capital. Well, of course, very strong moves coming in just an intraday basis on AV Capital, really recouping all the losses that the stock has actually seen in the past couple of weeks as well. But Nitin, hi, afternoon. Firstly, what's your take on the markets? Any pockets where you are finding strength in this sort of a market as well? Indeed, a lot of sector churning underway.
Oh, yeah, absolutely. So I think, when we went into this quarter, the expectations were very low because the expectation was that this is going to be a weak quarter, and the whole downgrade cycle that was happening, would probably continue. Having been almost, let's say we are in the middle of the earnings season right now, it's not been as bad as was earlier thought about. Whether you take the IT pack, whether you take some of the banking pack, I think it's not been as bad as was thought. So I believe that, which is a positive sign as we look ahead, because the so-called slowdown that the economy is experiencing is possibly not as bad as most people thought, and which could mean that as we get into the second half of the year, we could see the worst of the downgrade cycle behind and in fact start looking at some upgrades.
Okay, so that's the take on where the market is headed, what the market texture right now is. But Ruchit, hi and welcome to the show. Good afternoon to you. Let's get your view on some of the sectors that are doing very well today. We spoke about the metal sector with our guest earlier. But what are you making of the moves we're seeing on real estate, IT? IT was one of the top losers today, and look at the kind of rebound it's seen from the day's low. That index is higher by 1.6%, and similar moves for real estate as well. A couple of stocks, Ruchit, if you're liking from either of these pockets at the moment?
Yeah, hi, very good afternoon to everyone. So I think IT overall trend, although it's not positive, but post the recent correction, some of the heavyweights such as Infosys, TCS, HCL Tech, the momentum readings in these stocks are quite oversold. So whenever we see such oversold setups and the stocks comes near the support, we tend to see some pullback moves, at least in the near term. So I think a short-term pullback move can be seen in the Nifty IT index, led by stocks such as TCS, HCL Tech, Infosys, where the stocks are trading around the supports, and even on the hourly chart, if you see all these three names are showing some positive divergence along with the RSI. So not a trended move, but at least a short-term pullback move I think should be seen in the IT space.
All right, that's the day coming in on the IT space. Well, of course, not just TCS, Techem, HCL Tech, these stocks are on the up move in today's trading session. Nitin, coming back to you, I believe cement was one such pack where you believe that the earnings growth will definitely lead to good growth in the stock as well, and you were indeed bullish on the cement pack. Nitin, off late, we are seeing the only pack that is showing resilience is the cement pack. Look at the move that we are getting to see on stocks like Ultratech, Ramco, Star Cement in today's trading session. Even Ambuja and ACC, they are showing up move. What's your current take on cement pack, and from these levels as well, what sort of an upside do you believe this sector and stocks can really show?
So, cement has possibly shown, most of the cement companies have shown the best EBITDA per ton over the last 1 year. This has been a really fabulous quarter for almost all the cement companies in terms of their profitability. As we talk, the second quarter is traditionally a weak quarter because of the monsoon month. But I think we will continue to see a strong uptrend as far as cement companies are concerned, because I think the focus on infrastructure spending and capex is going to drive this. And it's my own view that given the current scenario with regard to tariffs and so on and so forth, plus the concerns over the domestic slowdown in consumption, I think the government will, in my view, be forced to relook at the slated expenditure that they have slated, driven for investments, and I think that should see an uptick and see that happen in the second half. So I think cement, we continue to remain positive.
Move coming in on the entire cement space, but let's pull up the stock of Bharti Airtel and take a look at what that stock is doing ahead of its earnings tomorrow. And the stock is up. It's a good uptick coming in on that stock, 1.6% higher as we speak. What is the street penciling in when it comes to Bharti Airtel's numbers? What can we expect to see? And more importantly, where are all eyes going to be? What are the factors that are going to be important to watch out for in terms of management commentary or some important metrics out for when the numbers do come out tomorrow? Pulkit is here to take us through all of that. Pulkit, over to you.
Bharti Airtel is about to announce their Q1 results. So if we talk about the revenue in INR terms, we are expecting somewhere around 2% up. If we talk about EBITDA, it would be around 1.6% up. For EBITDA margin, we are expecting it to be flat. A slight dip could be seen, that is around 20 basis points. For profit after tax, we can see around 42% dip. And please note that this would be there because of the exceptional earning that happened in the last quarter. If we talk about the adjusted PAT, we are expecting somewhere around 23% up. For ARPU, that is average revenue per user, we are expecting it to be around 249 rupees, and which would be around 1.6% up quarter-on-quarter basis. Now let's talk about the expectations, that what we can expect from the results. The most important thing would be we can expect a healthy growth in the revenue earnings. For the mobile segment, it can be a steady growth, and for the Airtel Africa business, we can expect a good performance, because in last quarter there was some tariff hike, there were some mobile rate hikes. If we talk about the key things to watch, the most important thing would be FY26 capex plan, how the company is planning for their capital expenditure. Next would be the progress of 5G implementation all over India, and the commentary on how the tariff hike is happening, mobile tariff hikes in India as well as in Africa. So this would be some news that we can expect from the Airtel earnings.
All right, thank you so much, Pulkit, for getting us all those details. So indeed, all eyes on the numbers when it comes to Bharti Airtel, and just a while back, the company has also launched their cloud services for the telecom operators. The press conference is underway, and that's what we are getting to understand from the management itself. So interesting development on that front as well. But Aditya, just wanted to have a chart check on Bharti Airtel, because yes, of course, this has been one of the key outperformers in the market, and look at the move, still near that all-time high level for itself. What do you make of the Bharti Airtel on the technical front?
It's more of a consolidation that you're witnessing on the stock, and my sense is this consolidation is likely to continue. If you want to purely take a trading bet on Bharti Airtel, maybe for a target of 2050, you can take a trade. with a stop loss on the downside at 1870. That is all that I see. Overall, if I flip to a higher time frame chart, I see overbought levels, overbought zones, and if anything, I would not be a fresh buyer in the stock for a positional trade. Talking of 6 months to about a year's time frame. So it's more of a trading bounce that I see to levels of 2000, 2050 on the upside.
Okay, so that's a take on Bharti Airtel. Also, remember very recently, Bharti Airtel also announced that it will be giving a 12-month subscription of Perplexity AI to its users. So that is also another big news so that we've seen when it comes to Bharti Airtel recently. So in fact, lots to watch out for when the stock does come out tomorrow, and all eyes are going to be on that as well. But Nitin, coming to you, what are you making of the move that we're seeing on select banking counters? It could be large caps, it could be PSU banks. While earnings this season have not been all that great, what are you making of how the earnings have panned out for banks, and what's the road ahead?
So when you look at the banking sector, I think it's very interesting. Once again, I think the quality of the franchise has, stood out, and you can see that among the leaders as well as the banks were struggling. So a couple of things. One is, banking is expected to see a compression in NIMs, which is what we saw in the current quarter, and that's expected to happen even in the next quarter. Uh, However, from the third and fourth quarter, you are expected to see the recovery happen. The upfronting of the rate cuts that happened and the aggressive cut that happened has actually essentially seen the pain being upfront also. Uh, my own view is that banking should actually have a very strong FY27 because of a couple of reasons. One is the NIM compression that we are seeing is a two-quarter phenomena, in my view, and we should start seeing a reversal start to take place. Second is credit growth, which has been muted, should come back in the second half of the year and more so in FY27. So I think FY27 is going to be a good year as far as banking is concerned. And within that, companies or banks which have a strong franchise, and have demonstrated their ability with strong underwriting skills are the ones which will continue to lead the pack.
All right, so that's the take when it comes to select banking counters. Well, of course, we are seeing a bit of a divergent move, at least in today's trading session, because a while back it was actually HDFC Bank that was one of the top losers on the Nifty 50 side, and it's the second top loser on the Nifty 50, while of course the decline is just 1%. But Ruchit, what do you make of HDFC Bank on the charts? Because definitely Nifty Bank is languishing in trade, and so is the heavyweight HDFC Bank.
So I think if you look at the broader charts, then the broader chart still remains positive, but just from a short-term perspective, post the recent run-up, the RSI on the daily charts is ending at some negative divergence, which usually leads to either some consolidation or pullback move. So we think that some minor pullback towards 1950, 1960 could be seen in HDFC Bank from a trading perspective. But yes, if one is looking from more from a mid to long-term perspective, then no, it remains a buy and dip stock where any declines towards the support should be used as a buying opportunity. But if one is a momentum trader, then one should wait for a decline towards 1950, 1960.
Okay, so those are the levels to watch out for in HDFC Bank. Aditya, what's your take on some of the top gainers today, namely Delivery and UPL? Both of those stocks are trading between 7.5%. Given the kind of run-up, would it now be a good time for our viewers who are invested in these stocks to book some profits, or are you viewing a further upside here?
Let's first talk about delivery, Snehi. I think this up move is a very strong up move from almost 52-week lows. Stock has doubled from 240 odd levels to 460 on the upside, and it's a very strong going, mind you, on the back of strong volumes as well. So I wouldn't suggest exiting the stock just yet. If you had bought it at lower levels, continue to hold on to the stock. Trail your stop losses. The current stop loss that I would suggest would be around 400 odd levels. And the immediate target that I'm eyeing on the stock is around 480 to about 490. And once that is taken out, 600 is also something which is possible on the stock. If you're looking for a fresh entry in delivery, I would suggest you can buy again in a staggered manner, some at current levels and some if it declines to 450 odd levels, it will be a good entry point again with a stop loss at 400 and look for a target of 490 on the upside and then 600. So this is as far as delivery is concerned. Talking of UPL, again, that has been a very strong up move in the stock. Friday session saw a bit of a decline and then again it has recouped all its losses. Again, a very strong looking chart setup on the high time frame. If I look at it, looks like stock is poised to test its previous all-time highs of 835, 840 on the upside. So I would suggest continue to hold UPL as well. And as a disclosure, this is one stock that is recommended to our clients as well for a target of 800 to about 830 on the upside, and use declines to initiate fresh long additions in the stock with a stop loss somewhere around 650 to about 660 on the downside.
All right, so that's about UPL. Very strong moves or rebound in today's trading session, and a 7% jump, like we have been flagging off. The management commentary remains to be quite positive. But along with that, if we talk about some of the cap good companies, and Nitin, what we are getting to see is that yes, ABB India has been not a great set. Even the management commentary is not giving a lot of confidence, and taking cues from that, maybe stocks like Siemens, Thermax, they are also feeling that heat. But along with that, if we have to really compare it with one of the other large cap companies, that is L&T, did come out with a good set of earnings, and very divergent moves is what we have seen just on the day of the earnings itself. Nitin, what's your overall sense on this particular space, and if one really has to be very selective, any particular pocket to bet on?
I think very clearly the winners have come out from the power transmission side. I think companies on that side of focusing on capex on that side of the business, power cycle, have actually done very well. It's manifest in the strong order book flows that we have seen in companies out there. Some of the other companies are proxies for private sector capex. Private sector capex is something which is just about starting, and we will see the impact on order books come with a lag. But clearly, the segment which has done well is power, and more so within that, power transmission.
Okay, so that's the take on the private capex theme and the revival that we're seeing on that front. But like Shrishti was mentioning, let's just throw the spotlight on ABB and pit it up against L&T and see how both of them have performed in the quarter gone by. Some important metrics to track and how divergent these numbers have been for both of these major companies. My colleague Kanishka, who tracks the sector closely, is here to give us a detailed analysis on how both of these companies have done in quarter one.
Two big capital good companies have announced their June quarter results, and it's a rather contrasting performance and commentary for the rest of the year, especially with respect to order inflow. Now, let's take a point-by-point look. In the June quarter, L&T reported a very strong performance, whereas ABB India, that faced operational headwinds. L&T's order inflow jumped about 33% on a year-on-year basis to its highest ever in Q1, with a massive order pipeline of 15 lakh crore also identified. Its total order book now stands at 6.1 lakh crore, up about 24% on a year-on-year basis. However, margins saw a minor contraction of 27 basis points to 9.9%. In contrast, ABB India's order inflow dropped 12% on a year-on-year basis, mainly due to timing of large orders as per the company, although base orders also seem to have improved. Now, its order backlog rose about 6% on a year-on-year basis to 10,064 crore rupees, but margins, they have shrunk sharply by over 600 basis points to 13%. On private capex trends, L&T management said that it sees a revival both domestically and globally. Meanwhile, ABB India expects short-term moderation in private capex, but stable long-term demand, particularly in sectors like energy, efficiency and industrial automation. Outlook-wise, L&T has maintained its guidance, expects nearly 15% revenue growth in FY26, whereas ABB, that hasn't really given a specific number, but said that it is confident of delivering sustained growth. Now, remember, this was ABB India's revenue growth was 12% during the June quarter. Well, all in all, L&T and ABB India results reflect a strong macro backdrop, but company-specific execution and order dynamics are clearly driving the divergence in performance for the two.
Okay, thanks Kanishka for that very detailed analysis. Let's once again throw the spotlight on an earnings that we're expecting to see tomorrow, and that's ex-Nifty 50 company Britannia. That's no longer a part of Nifty 50 now, but the earnings are expected tomorrow. And here's what we're penciling in when it comes to Britannia. The stock is slightly under pressure today, but it has no reason to be other than the fact that the entire FMCG sector is in a little bit of a pressure given the kind of heavy lifting it has done over the course of last week. So if you take a look at Britannia's Britannia's numbers. All in all, we're expecting a decent quarter from Britannia this time around, because on the consolidated year-on-year basis, we're expecting the revenue at 4,610 crores, which is up 8.5%. EBITDA seen at 815 crores, which is up 8.1%. Net profit also we're expecting to rise quite healthily, might I add. 12.5% increase is what we're seeing on the net profit front at 570 crores. Margins, however, are seen flat at 17.7% mark. Volume growth is seen anywhere between 3 and 4%, and pricing growth is seen at 6%. Of course, the cool off that we've seen in inflation, in raw material inflation, and of course palm oil duty cut from 20% to 10% now by the Indian government are going to aid the stock going ahead. In terms of factors to watch out for when the numbers do come out, watch out for demand outlook, raw material scenario, pricing action, ad expenses, as well as commentary on rural and urban demand. So that's the take on Britannia. All eyes are going to be on the numbers tomorrow. But Aditya, what's your sense of Britannia on the charts, and amongst the FMCG staples companies, which one stands out to you most?
Britannia definitely doesn't look all that weak to me, Sneh. It's more of a consolidation after a good up move, as you mentioned. FMCG had outperformed last couple of weeks. My sense is it's going to continue to outperform in the coming times as well. FMCG could be the one sector to watch out for the rest of 2025. And my sense is stock could test levels of 6,100 or 6,300 on the upside. So that is as far as Britannia is concerned. Even if the results disappoint and if you see some bit of a profit taking in the stock, I wouldn't shy away from taking a long position in Britannia. And because over a period of time, I believe stock will again consolidate and test levels of 6,100, 6,300 on the upside. The one stock that clearly stands out for me is HUL, Hindustan Unilever. That is one stock which has done phenomenally well, and I think that is likely to continue its up move in the coming times. Being a large cap stock, I think stock can test levels of 2,700 to about 2,900 in the near term. From the mid cap name, I've got Marico, which looks very strong, and after recent numbers, I think if anything, stock is likely to test levels of 770 to about 800 in the medium to longer term.
All right, so that's the take on select FMCG counters. But with this, Nitin, I would like to thank you for taking the time out and speaking with us. So good having you on the channel today. Thanks so much for that. But with this, viewers, just a few minutes left before we shut shop. Let's get you some of the trading ideas from both of our experts. And Ruchit, help us understand any of your BTST or rather STBT trade ideas.
I think a couple of stocks which are looking good at current levels. One is Power Finance Corporation, where we have seen a good consolidation over the last 3 months. And if you look at this entire consolidation, the stock has formed a symmetrical triangle pattern, and prices today have shown signs of rebounding from the support end. So the price-wise downside seems to be limited from here on. At current levels, one can buy with stock below 404 for potential up move towards 428. And TCS is one stock where a pull trade can be taken. As we discussed earlier as well, IT is one space where the momentum readings are quite oversold. TCS is trading around its previous swing low support and has a positive divergence on the lower time frame chart. So this is one stock where a pullback move can be expected. One can take a long position with stock below 3,000, expecting targets somewhere around 3,150 to 3,180 range.
TCS looking good to Rajat. Aditya, very quickly, where are you placing your BTST bets?
A couple of buy recommendations. The first one is Reliance for a target of 1470 on the upside, the stop loss at 1380 on the downside. The second one, which we discussed, Marico, is looking interesting to me for a target of 770. I'll be a buyer with a stop loss at 698 on the downside.
All right, so those are the buy calls coming in from both of our experts. But with this, we let you go. Thank you so much, Ruchit and Aditya, for taking the time out and speaking with us. But indeed, it's been a decent day for the markets because we have seen good gains rather coming in on Nifty 50. Nifty Bank is actually heading towards and closing in the green. But with this, let's hand over to Ashesha for the market close. Ashesha.
Well, yes, we did recover from the lowest point of the day in the second half of today's trade, and as you mentioned, decent closing coming in, at least for the Nifty, which is ending 165 points higher for the day, near that 24,731 mark. Nifty Bank was underperforming in trade today, but despite that, managing to hold on to marginal gains for today's trade, ending nearly 25 points higher, near that 55,640 mark. In terms of individual stocks, we had Hero MotoCorp up 5%, the biggest gainer on the Nifty 50 index. Hero MotoCorp was followed by Tata Steel up 4%, and Bharat Electronics, that one is also ending the day with gains of nearly 3%. On the losing side though, we had Power Grid down 1%, and HDFC Bank is also ending the day with cuts of nearly 1%. In terms of individual sectors, we had metal stocks which were soaring in trade today. Tata Steel, Jindal Stainless, all of them ending the day with gains anywhere between 4 to 5 odd percent. Nifty Metal Index up for you 2.5%. Tata Steel is also ending nearly 4% higher. JSW Steel ending 3% higher. Realty stocks were also shining bright. We had Lodha up 3%, Godrej Properties up 2%, Prestige Estates is also ending nearly 2% higher for the day. FMCG was one index which was gaining last week, but we saw some bit of profit booking as far as realty stocks are concerned. We had Radico Khaitan, which was down 1.5%, which was the biggest loser on the Nifty FMCG index. Godrej Consumer and Imami are also ending the day with marginal amount of cuts for the day. In terms of individual stocks, we had ABB India. Very weak set of numbers that the company reported. Management commentary also continues to be on the cautious side, where they say that second half is likely to be muted and they are likely to see momentum only by next year. So on the back of this, ABB ending the day 5.5% lower. ABB, the entire capital goods space was under pressure on the back of that. Delivery up 7%, very strong set of numbers that the company reported. And Utkar Small Finance Bank, that one is ending with a cut of nearly 8% after it reported very weak set of numbers. So all in all, broader markets, we had a whole host of individual earnings-based and commentary-based movers in trade. But on the index level, Nifty is ending near that 24,726 mark and Nifty Bank was underperforming in trade. That's all the time we have in this edition of the show, but don't go anywhere. More news and updates will continue on the other side.